Welcome back to another episode of Lucid Daily. Today we have quite a bit of news that we need to cover. So first off, we'll cover today's stock action. We'll cover two different pieces of news. We'll cover the volatility of exactly what happened this week, and we'll kind of talk about the history a little bit of Lucid, some of the things that I wish I had done better, and we'll answer as many questions as possible. So let's get into it. Very first off, let me go ahead and share my screen really quick. The first thing that you want to take a look at was Lucid's stock today. Lucid was up 14% today alone. That is absolutely crazy. 14.7% today. And then they were up 2% in the after hours. So today alone, they swung 16%. That's absolutely crazy. Not too many companies did that today. Tesla swung, I think, 4 or 5% by the end of the day. So they had a really good day, but you could argue that Twitter, with all the drama that happened with Twitter, that it boosted Tesla shares a little bit. I'm not talking about Tesla, but there was a couple of things that happened today, but there wasn't any kind of fundamental changes in the company that drove catalysts that drove the stock price like this. So let's go ahead and dive into exactly what happened today. We'll talk about the history of the stock and some things that I know now that I wish I had known back a couple months ago. So first off, pretty big news. Lucid opens their very first factory in Europe. So it's actually in Germany. This is a really big deal this is a big deal for Lucid just to show they're expanding. Some people may argue that they're actually expanding too quickly, and I understand where those people are coming from. I would love to see them. The thing is, those 30,000 reservations are going to run into 2023. So they need to continue to work on getting more reservations. I'm not saying they're going to have a problem with demand, but I do think that it's going to have to be a constant push to continue to get reservations until they get to a point where demand exceeds production, which they're at that point right now. But I think after they hit that 30,000, when's the next 30,000 going to come in? They kind of have prepared 3, 4, 5 years to get those 30,000 reservations. So nonetheless, it's still really good news. And I think that this is an effort to continue to push to build more reservations. You can see if you've ever been to a Lucid studio, they all look and feel the exact same. I actually did get to go to a studio opening and did talk to Peter Rawlinson. I actually made a video about it. I was able to sit there and visit with Peter Rawlinson for a little bit, and I was actually able to drive a Dream Edition, which is pretty rare. So that was a lot of fun. Next, something kind of unique. This doesn't really have any bearing when it comes to This doesn't really have any bearing when it comes to the stock price, but it's just kind of interesting. You have Steve Wozniak received his Lucid Air Dream Edition today, from what it looks like. If you don't know, Steve Wozniak was one of the co-founders of Apple. I don't know how long he stayed with Apple. I'll have to double check on that. But nonetheless, it's cool to see Steve Wozniak, an icon like that, get a Dream Edition. So let's go ahead and continue. So over the last 5 days, Lucid has had an insane swing. If you go to the bottom at $13.57 a share, that's lower than I thought I was going to get, than the stock price was going to get. But the stock market has been absolutely hammered. So if you go from 13, the very bottom, to the end of today at 4 p.m., it was up 32%. That's a $10 billion market cap swing. Like, they were trading for around $20 billion at this point, and they swung all the way up and added another $10 billion to the market cap, which is absolutely crazy. If you go to the month, they're still down 14%. 6 months, they're down 59%. Year to date, they are down 56%. And the year mark, they're up a third of a percent, which it's relatively flat over the last year. Something that I'd wish I had done. I want to talk about not necessarily a regret, but something that I've learned through doing this process. So as a lot of you guys know, I'm not going to dive into the spreadsheet. I'm just kind of showing this to put something on the screen. As a lot of you know, I have gotten into doing a lot of fundamental analysis on companies and kind of just dissecting exactly what their expenses are, what their revenues are, their profit margins, their estimates, their net income, their EPS, and a lot of things like that to kind of help me calculate where a company is. And yesterday we calculated that Lucid hopefully will have a positive EPS between 75,000 and 100,000 cars. Hopefully that's when they'll hit profitability. It could be a little bit longer than that if they spend a lot more on R&D. But I took their last quarter and I extrapolated it the next 4 quarters, and I kind of discussed how I can calculate their expenses. Right now, it's just kind of difficult at this stage. So that, from my estimates, that's when Lucid is first going to hit a profit. Now, when they hit, let's go ahead and I'll explain. So what I wish I had done is I wish I'd made this spreadsheet earlier. Now, this isn't doubting the company at all, but what I wish I had done is I have an average cost of like 31 I don't hold a ton of shares, but I hold about 2% of my portfolio into Lucid. I know some people are like, only 2%, like that's crazy. Well, when I break down my spreadsheet, it makes a little bit more sense about where I can get a better ROI. And right now, I believe that my better ROI is Tesla, but that's not the point of this. I still love. There's a lot to learn from Lucid, and I think there is a lot to gain here if you play your cards right. Now, what I wish, like looking in hindsight, something that I'll be more aware of as I get more experience in the stock market, as we all are right now, is I wish that I had taken my $31 a share, and when I saw Lucid hit $55 a share or whatever its peak was, I think they hit 60 at one point. I can't remember. I wish I had taken some profit off the table just to kind of like we're in the stock market, and I feel like a lot of us have gotten so emotional. I was definitely guilty of this, and sometimes I still may be guilty of this, of being an emotional investor, of thinking like, oh, like if I sell my shares in Lucid, it means I don't believe in the company anymore. Well, we're here in the stock market because we want to make money. Like that's the bottom line of it. Do we believe in companies? Yes, but in the short term, seeing Lucid run from whatever about like a $30 billion cap to a $60 billion market cap without having any deliveries, it's really cool that they ran like that. But we should take advantage of those opportunities and take some money off the table so that we can buy more shares if we want. That's a great strategy. For example, we can look at this past month. Like when I saw Lucid hit $13 a share, I probably should have picked up some more shares. I didn't. So these are the kind of things that I'm learning. It's obviously way easier to look in hindsight, but when Lucid's trading for a $20 billion valuation, you can kind of, I understand that they're trading for a huge multiple still at $20 billion valuation, but the numbers are starting to get more compressed and make a little bit more sense, especially knowing that they SPAC'd at $10 and that they're backed by Saudi Arabia. And if you're allocating a certain percentage of your portfolio, you should just kind of go in with the strategy, like, hey, like, here's where I think Lucid is valued right now. For example, if Lucid delivers 20,000 cars, I believe they're still going to have negative earnings, but they should have a little bit closer of an opportunity to get to that profitability. So until I see that they're going to hit 20,000 cars, I know that they still shouldn't be at $60 a share. And I should have taken some money off the table and be like, okay, like, look, I'm going to take this money. And when it settles back down, because the market hopefully will correct itself, and that you gamble, that's kind of where this gamble in the stock market goes. Like, okay, like this valuation is absolutely insane. I'm going to take a little bit of money off the table. I'm going to wait until there's a red day. I'm a dollar cost average down, especially when we started to see Lucid fall like this. I was buying right here in the 40 range, but that was still a little expensive. What I should have done is taken money off the table and just set limits. Like, okay, when Lucid hits 40, I'm going to put money back in. Or if Lucid were to run to 100, it's like, oh man, like I took a little bit of money off the table. I took some profit. Maybe I should wait for a red date and buy back in, or I should find another company that I really want to invest into. Or maybe if you really do believe that Lucid is overvalued, you could wait a little bit. But the same goes reverse. Like I wish I had bought in the 13 because I would have gotten a 30% ROI like that. So I'm starting to learn to be greedy when the stock market is going super bull, like just super bullish and everything is going crazy, but also be patient in a bear market. Buy more shares when you want. Accumulate these companies that you want to have for a long time. Like when you're buying at $40 a share, when it just IPO'd at $10 a share, it's like, whoa, like that's that's kind of crazy. Like it's not normal growth for a company that hasn't produced anything yet. So the market, it's not rational. It's not, I forget the word. The market won't regulate itself perfectly, but it will start to find some sort of equilibrium. So I'm really going to be interested to see where Lucid settles after we kind of get some regularity in this market. So I'm not giving, these are some of the things that I've learned. I'm not implying I actually still hold on to my shares. I held on to my shares from like here. I rode it all the way up, and I don't know really what I was expecting. I don't know if it was going to keep going. They would have been digging themselves a deeper hole, and I believe it would have come back down eventually. Like I just wish I had known what I know now. And I was buying in the 40s, and then when I saw the whole market shift down in January, that's when I should have taken some profit. I'm not saying sell all my shares liquid to zero. I mean, looking at hindsight, it would have been smart, but we never know that. So that's a little bit of my rant of the things that I'm learning is to be a little greedy in the Super Bowl market and be patient in a bear market. Kind of dollar cost average in, build a good build a good position. That's what I'm doing with Tesla. I've sold a lot of my positions in companies. Like today, I sold Disney. I bought way too expensive, and I was just holding on to a substantial amount of Disney. I was like, you know what? I'm going to sell these at a loss and buy Tesla because I will get a better ROI on those Tesla shares before I get that on Disney. And I sold it at a loss so I can use those as a tax loss. So I'm starting to learn not necessarily day trade, but be a little more active and be a little proactive with the economy and be proactive with what I believe will be the future. And do I regret not buying Lucid at $13 a share? Yes, like I should have. I don't know what I was thinking. I should have bought some Lucid at $13 a share. So that's kind of my rant. I hope you guys understand where I'm coming from. If you sell out of a company, it doesn't necessarily mean you don't believe in the company, but you may not believe in the market at that time. Like, whoa, like the market's valuing this at something that my spreadsheet doesn't even value it at. And you can play with your spreadsheet numbers, be like, okay, maybe I'm being a little too bearish in my spreadsheet, or maybe I'm a little too bullish. So that's the advantage of doing your own due diligence like this, is doing your own research, doing your own formulas, and doing everything like this. That way you can go, all right, I know how much I own, I know where I want to sell, and I know where I want to buy. And just not be so emotional. That's something that I'm working on, is not being as emotional in the stock market, as learning to take profits, learning to take losses and reinvest. So like, for example, if I had sold up here and waited for, like if I had sold in January, let's say I held it through and I just saw the whole market go to crap in January. The S&P is falling, everything's falling. I should have taken that as a sign, and I should have known that the Federal Reserve was going to have to tighten. And I know a lot of people are going to hate that I say this, but I kind of should have listened to meet Kevin when he saw the economic downturn, and he was right. And even if I had bought back in here, it's still better than holding at that point. That I know it's a little bit more of an active approach, and you have the best strategy is to buy and hold long term. But when you know catalysts are coming, like if you know that the car, I can't find a good analogy right now, but like if you know there's a waterfall ahead and you're on a little rowboat, like you're not going to keep rowing over the waterfall. That's kind of how this felt. Like if you know there's a waterfall ahead and you're starting to get to really inflated valuations, like, hey, like we should get off the river right now until we can walk downstream a little bit and pass this little waterfall. And then you find calmer waters and you can row down the water. You can roll down the calmer waters. That was an analogy I just kind of pulled out of the air. But I hope what I'm explaining makes sense. I'd love to hear from you guys in the comments. What are some things that you guys have learned this past year investing? We've seen a flat market, a Super Bowl market, and then a bear market. And over the year, Lucid is almost flat, literally almost flat. So it's been a lot of interesting things to learn. So I hope you guys enjoyed this video, and like always, see you next time. Thanks for watching.